What is going on, investors? Hopefully you guys had a great day out there. Time to talk about the Walt Disney Company, ticker symbol DIS. Over the last year, stocks up just 70%. Year to date, though, basically flat. In the after hours, we're seeing this stock sell off by about 3.75%. When we get over to the stock chart, talk about how this is kind of a critical area where maybe you can buy this one. Maybe you can wait here since it's at a critical area. You break this critical area, you fill some gaps down here, you might get this at a lower price. We'll talk about that now. They reported their earnings. We're going to jump into the numbers. We'll take a look at the revenue, the profits with this one. Take a look at the subscriber numbers with Disney Plus, ESPN Plus, Hulu, things like that. And then we'll take kind of a broader view of the financials as well. As most of you, I'm sure, realize, this company's been under pressure from kind of two different angles. You've had movie theaters that are closed, which hurts their film business. You also had the parks, especially out here in California, which is not a free state, unlike maybe Florida is, where they've had the park open for a very, very long time. And so the company's been under a little bit of pressure. But we saw during the earnings report, they renewed their MLB deal through 2028, and that's not necessarily something that's big, but what we do see here is films are heading back to theaters. So as things are, hopefully, fingers crossed, it looks like things are getting pretty good. You look at the numbers out there in terms of the health situation, things are looking good. That means films are heading back to the theaters. Now, this stock has been on a monster run. It's gone from 86 to the lows. It kind of went back to where it was pre-health situation, 130s, 140s. Well, it's kind of gapped up here into the 200s. We're sitting at 172. So has it pulled forward a lot of this good news? Talk about that as well. Now, Disney Plus subs missed while the average revenue per sub fell. It went from $5.63 all the way down to $3.99. So they're giving that away pretty cheap. That does probably put a crimp in their competition as well, because $3.99 a month on an average price for something like that seems pretty cheap, seems like a pretty good deal to me. Now, here's our high-end look at the revenues. I like to look at this and operating income down here at the bottom with Disney. I like to look at this because they got a couple other, they got some different businesses as well. So they've got their revenues here. You got your linear networks. That's basically flat. That's your ABCs. That's your ESPNs and things like that. You got your direct-to-consumer here. Notice that is up 59% just in the last quarter. It's not profitable yet here. That's what I want to stress, though. So we've got our operating income here. You see on your linear networks on $6.7 billion worth of revenue, they make 2.8. Okay, that's up 15% over the last year on a quarterly basis. On this direct-to-consumer thing, though, you're still losing money. But it appears we're reaching somewhat of a tipping point with this. The other thing that you want to keep in mind with this direct-to-consumer, so Disney has had to do a lot of advertising with Disney Plus. Okay, they've had to do a lot of digital advertising, whether it's on Facebook or Google or maybe even like a Twitter or Pinterest or something like that, to get the word out, to get that type of growth they need on the sub side, which we'll take a look at here in terms of total numbers. Okay, at some point that marketing can flatten out because as many people that are out there, there's only a certain amount that need a Disney or want a Disney Plus subscription or a Hulu or an ESPN Plus. So that can flatten out a little bit, and then I think we'll see the turning point even more so with this operating income. But you see, we grew our direct consumer on the revenue side by 59% from 2.5 up to, we'll call that $4 billion. Now, unfortunately, we're still losing money, but we've improved quite a bit. We went from 805 to 290. Okay, basically break even. I mean, from almost a rounding perspective, you're basically breaking even on that. So all things being considered, from this broader view of Disney, things look pretty good to me. Now, from a subs perspective, this time last year, they had 33, I think this is in millions. Yeah, 33 million in terms of Disney Plus. And it's gone up to 103 million. 103 million. How many people are in the United States? Not that many, okay? Now, I mean, there's more than 103 million, but in terms of adults, I mean, we're not talking that much more. So obviously, Disney Plus is worldwide. They're getting subs from all over. Just an impressive number. I would anticipate, though, this number to start to flatten out. You're not going to see 100% year-over-year growth. I don't think anybody in management at Disney is going to claim that. I think you start to see this flatten out, but will also flatten out is the advertising and the expense to kind of monetize that base and acquire that amount of customers. So that should pay dividends year after year for Disney. So we're not going to see this explosive growth on the digital side. But like I said, to grow your subs 100% in a year, you had to advertise the crap out of Disney Plus, okay? That will flatten out. We're seeing on ESPN Plus, that is growing 75%. That is good as well. I don't know the details of these, but I know in some of the negotiations with the MLB, with the NFL, the NBA, things like that, they're trying to bring more of that content over to ESPN Plus, which would help the subscribers there as well. And with Hulu, you're seeing growth of 31%, 15%. That's probably what we'll get into with Disney Plus. Hulu's a product that's been around for, I think, over 10 years now. I think more than like 12 or 13 years, maybe even longer than that. So I think that is what we can kind of pinpoint into what kind of growth we might see with Disney Plus as the product matures. We get into this like 15%, 15 to 30% growth, which still would be phenomenal. Okay, that would be absolutely amazing. Now, from a pricing perspective, unfortunately, they lost about 29% off of their revenue per user, went from $563 down to $399. We were able to grow ESPN Plus 7% from $424 to $455. The more live sport content they can get onto ESPN Plus, especially something like NFL football, Monday Night Football, Thursday Night Football. I think Amazon has the rights to Thursday Night Football, but any kind of live sports, NBA playoff games, MLB playoff games, whatever it might be, the more you can start charging for something like that as well. Certainly sports fans are comfortable paying up for things like that. And you see with Hulu here as well, basically flat on that, I think that's standard video. And then with live TV up nicely, 21%. Average user paying $81. Probably hit a ceiling here at some point, because I got to figure, at some point, instead of Hulu, you could get a Comcast, or you could get a DirecTV, or you could get a Dish Network subscription if the price just becomes that close. And so I think they'll run their head up against some growth there, but all things being considered, things are looking good. Now, from a higher level, when we come here, take a look at the statement of income for Disney, we've got our revenues here on the top line. We're seeing that is still down, likely due. We're still probably seeing some pressure on the parks, obviously the movie theaters being closed as well. Business is still under a little bit of pressure. Now, they've done a nice job controlling costs. We went from 16.6 down to about $14 billion on that cost and expense side. And so that brings us down to, we'll just come all the way down to net income on this one. Or here's our net income line right here, that we went from 520 down to a $1.1 billion. We might as well look at it as attributable to this Disney company. We went from 460 up to $900 million. Okay, so they shed $3 billion off of their revenue line, but because they controlled costs tremendously well in the quarter, they actually almost doubled their net income. We see for the 6 months, this company is still way off where they normally are. Okay, they were making $2.5 billion for the 6 months of last year, and they're sitting at $918 million. So nearly half, actually a little over half of the revenue, net income still not back for Disney. So there still is a lot of green underneath this company. Now, from a capital, this company is extraordinarily well capitalized, as I think you would imagine. For the last 6 months, they still have about $15.8 billion in cash. They've got another 12.5 in receivables. In terms of debt on the balance sheet, we got a little bit here. We got a little bit, $50 billion. But when you have the assets that Disney has, that they can't necessarily recognize, like, what is Mickey Mouse worth? What is, some of the properties that they own, what is that worth? If they were to put that up for auction, considering you got NFTs selling for, millions and millions of dollars, what would the rights to Mickey Mouse go for? Just a tremendous amount of money. So they can't necessarily recognize that on the asset side of their business. They've got some intangible assets, but I guarantee you that's not even close to what you've got in terms of value of intellectual property over at Disney. So this $50 billion, while it looks a little scary considering they've only got $15.8 billion, and we saw over the last year the kind of pressure this business can come under in terms of movie theaters and being closed and the parks being closed, they did a beautiful job controlling costs, maintaining profitability, and those types of things. Now, in terms of the stock price, this thing is on a critical level right here at 170. I would expect one of two things at this level: this thing to bounce, but again, how much higher could it bounce? Back up to the 180s, 190s before it reached resistance? Probably up $10. Tell you what, you break this 170, you're probably bare minimum retesting 160, which is the lows here. I would anticipate actually filling this entire gap here, which would take us all the way down to 155, just to keep round numbers right in that 155, 160 range. I think you could, at that point, the trend will be completely broken from a technical perspective. I think you could come down into this 140, 150 range. Me personally, I already have some shares of Disney, kind of overweight this stock as it is. I like this sector. I would probably like to get some exposure to Netflix, which I don't have, and maybe some other media properties in this space that I would wait for a pullback to this 140, 150. Now, it can bounce here, but I think, this is just my assumption, that the market has really priced in a lot of the recovery already with Disney, okay? It's priced in a ton of recovery, the parks reopening, the movie theaters reopening. A lot of that is kind of baked into the stock price as well. Now, but for the longer term, I love the trend that we have, and I don't think the stock market is really valuing the value of this Disney business. They're probably looking at this average, revenue per subscriber, and it's only, quote unquote, only $4. But at some point, you stop having to advertise to grow this top line as much, and then you have pricing power. Because I know from just anecdotal experience what a Netflix subscription costs. I know what a Hulu subscription costs. I know what a Fubo subscription costs. I know what other entertainment subscriptions cost. And $4 to $5 is way cheap, like super, super cheap. Okay. And so they have pricing power here. I think to at least double this. As a parent with 2 young children, I think you could get to $8 to $9 to $10 a month, and still Disney Plus is a no-brainer, especially if you have young kids, you like the movies, those types of things. So I like Disney. It's an interesting level. Wouldn't blame you if you thought, hey, the stock gapped up in here and it's going to hold this 170 level. Buyers, this is a logical area where buyers step in. But unfortunately, if the buyers aren't there, this one is coming down, and with not a ton of price action here, I think you could come, your first stop is probably 150, 145, 150, first area where I would entertain buying shares of this one again. Full disclosure, I own some Disney shares. Hopefully, guys enjoyed this video. We'll be back with more again very soon. Good luck with your investments.